Hi traders and welcome to Pepperstone's technical analysis wrap on Friday the 17th of July. So I've seen a pretty consolidated market this week. A lot of the majors have been hovering in the zones that basically we talked about last week. So not a hell of a lot has changed. The S&P 500 has been pretty similar, but there has been some good scalping opportunities in between, and the dollar index is starting to show a little bit of strength now. So we'll jump straight into the chart and see what we can identify for today's trading. So we'll start out with the Aussie on the daily chart. So you can see nothing much has changed since last week. The price has still been trapped in between this zone here. We've had basically a week of around 80 to 90 pips movement. You can see it highlighted really in between the 20 and the top zone. But we know that this top zone is that all-important 70 cents. So the way to look at this is you've got to take it down to the smaller time frames and say, all right, this is a 4-hour chart now. We can bring this down and see where the previous resistance was, and you basically trade inside that channel. Okay, so given that we're not getting any opportunities to go really long or really short on it, we've just got to trade what you can actually identify inside the patterns. Now, if you take this down to a 1 hour, and we can move it across, and you'll see that you've been given many opportunities to trade this one, even though it's been sideways for the best part of 2 weeks, and it hasn't really done anything more than sort of a 70 or 80 pip move in one go. There's been plenty of opportunities to actually trade however you want. You could trade off the support, short off the resistance. You can trade the moving average crossovers. You can trade the higher highs and higher lows. Plenty of patterns there to be able to trade. So when you see a sideways consolidation like the Aussie has been in for a while, it actually sets up some really good opportunities to actually scalp inside that zone. And sometimes that scalping is actually the easiest way to be able to trade. But when we go to a 4-hour now, you can obviously the last few hours have been quite weak. The daily is showing that we've got, I'll blow it up, but we've got effectively an almost engulfing type candle pattern there, all but engulfing, at the very, very important zone around that sort of 70 cent. Okay, so yes, it did go a little bit higher. It got to that sort of 70, 40 area, but it's certainly sold off there now, and it's starting to look a little bit, it's well and truly back in the zone anyway, so we know that for sure. So the more likely scenario is that it's going to probably play out and get back down to the support level. That's what I'd be hoping for on this one. The short-term time frames certainly indicate that. So when we go down to the 1 hour and the 4 hour, you can see we've got a series of lower highs and lower lows. We've got the shooting star candle that started it all, back down into the resistance zone and underneath the resistance zone, and now we're sitting right on the 200. If that breaks, we would fully expect that it's probably going to short down to the bottom of the range again. So not much to report on this one. It's got a little bit catching it down here, so just a bit of a wait and see. But we know this has been correlated with the S&P 500, so we'll have a look at that shortly. But not much to do except scalp on the Aussie. All right, we'll go to the US dollar CAD. This has given us a couple of scalping opportunities as well. On the daily, it's well and truly resting on the 200 moving average. We identified this zone last week, so it was always going to be a pretty solid zone if it happened to get there again. We need to go to a bigger time frame to really probably appreciate what you could have done with this, but it is trapped between the 200 and the 20 at the moment on the daily, so still got a little bit of work to do, but the MACD is definitely rising and not far off getting back above zero. So we know that the 12 is about to cross the 26 moving average from below it, which is obviously a pretty bullish sign. We can go to the 4 hour. You can see you had that bit of a double bottom sort of low in that exact same area that we're talking about on the 200 on the daily. MACD is signal lines out of the histogram now. It's taken a little while to do it, but 4 or 5 4-hour candles will certainly do that for you. Signal lines out, which is definitely bullish. Take it down to an hour, and you can see the series of higher highs and higher lows. So it was a pretty reasonable scalp off this level. The MACD was certainly agreeing with what we saw, so hopefully some people were able to take advantage of that. But now what we probably want to see, this has been a pretty big rejection candle late in the US trading, but what we want to see now is probably a pullback to around this zone and maybe a relaunch off it, because it's still got some legs in it. You could certainly start testing that sort of 136 to 136.50 area with a little bit more momentum, but that's going to depend a little bit on what the other US dollar based pairs are doing. All right, we'll move on to the Swissy. Okay, this is a similar story to the CAD in a way. It's sort of bounced off the support that we had here. Yeah, MACD is rising slightly, not as good. It didn't look as clean as the CAD did, but you know, when you take it down to the smaller time frames, you're still getting the similar effect. You've got that yeah, bottom here. You've got the cross of the 20 and the 50 moving average on a 4 hour, which is significant enough. It's come back and retested it. The only thing that worries me a little bit about this one is that it has got the 200 right in its face, and it doesn't seem to be, you know, having really big moves. We'll take it down to an hour and have a look at that. And again, doesn't look quite as clean as the CAD did. But, you know, that said, the dollar strength will certainly help it. And, you know, you could certainly see it push into this level here, which is unfortunately not very far away. And I think that's probably what worries me more about this trade. You've got support here. You know, you've got, yeah, that bit of resistance through there. Resistance there again. So, yeah, realistically, yeah, it's got about 30, you know, 25 to 30 pips before it runs into, you know, some sort of trouble with the 200 and the this roll reversal zone on the 4 hour. So, you know, if you want to scalp it, you've got to go to a pretty small time frame to do it. You have to go maybe to a 15-minute, you know, potentially take a series of higher highs and higher lows, trade it off the 20, maybe into that zone. But it is going to find trouble in, you know, the space of about 25 pips. So certainly one to be mindful of. But if you want to scalp it, there could be an opportunity there. All right, the US dollar, the Euro USD we'll go to now. We'll have a look at that on a daily first. As you can see, this week it pushed up to reach a recent high at around that, got to about 114.50, pretty much spot on. Obviously, yeah, it's respected this zone here. That was way back in March of this year. So it found, it found trouble there. It found it there again in the start of June, and it's retested it now. It had two pretty significant sell-offs off that zone. You can see both candles here on the daily shorted off, reasonably well, and today's candle is no different. The candle we've got at the moment, it's sitting around that sort of 113.70, so about 80 pips off the high. And look, MACD is certainly not really telling us anything that would get us excited about going long here. You can see that we've got the divergence. There's no worries about that. You can see that we've got that there. This is Class A. Okay, because we've got the slightly higher high. So, stochastic is telling us the same story. You can see here that that's even struggling to get into the overbought now, and you can see that it's starting to turn over just before the 80. So it's looking a little bit, probably weak more than anything else. I would think that if it's going to short down, the first support level it's going to find is probably around that 113 sort of 20 area. The 20 would have caught up by then. Okay, you can see this zone here. It respected it a little bit, as the 20s always do. We know the 20s get respected. So, yeah, the 20 will catch up by then. It'll probably find a little bit of support here, but that's probably my preferred trade. I'm not really convinced this is going to go long in any big hurry at the moment, because it's got a bit of work to do at these levels. So, if it is going to go long, I would expect it would probably come and test the 21st, maybe get to the low 113s, a series of higher highs and higher lows, and maybe relaunch into the top and have another crack at it if it's going to go long. But the preferred trade on this one is down to around that sort of 113. So, scalping opportunities again on this. You need to go to a lower time frame to probably see it. But you want to see a series of lower highs and lower lows, which you've technically got on the 1 hour. If it gets past this little mini zone here, you can see that the two tops that we were talking about earlier, if it gets past that and closes there on the hour, you could certainly see it getting into these this area here around the 1320, probably at the first stop. All right, we'll move on to the dollar index now. So firstly, we'll take it out to the daily. So you can see that we've had a little bit of strength in the last session. It's starting to push up. It's trying to get into the it really needs to break this 96.30 area. That's probably ideally what we want to see it do. It's got the 20 right in its face. We know that it's a problem for it. It's been a problem for a long time now. Right back from really the start of June, it's been trying to break through this 20 moving average on the daily and has failed to do so on every occasion. It's at the moment to get to the 20, it's sort of got to move another, the best part of probably 50 points. It needs to get to around that sort of 96, 75 area. So the good thing about that is that it's got that room to move and potentially push up. And if it does that, it's certainly going to help the US dollar CAD and the US dollar Swissy push through those little mini resistance points that they've got and get them to a bit of a higher zone, which is ideal for us. So, things are still looking up for it. We've obviously got the a very strong support level here. MACD is rising, which we like. Stochastic is turning up. RSI is turning up. So the dollar index has got a little bit going for it. I'm pretty happy with it. To break this, we want to break this high here, and probably the 4 hour makes it a little bit more clear. It's got roadblocks everywhere. We know that, okay, and this is basically a sign and a consequence of the 20 daily moving average being tested. All of these are hits of that 20 moving average. So it's going to find problems at every single zone. But you can see here that if it gets to that sort of 96.70 area, that's going to be the first serious area where it's going to probably find a little bit of trouble. But again, that move will be enough to get the US dollar base pairs that we were looking at to a level that would be comfortable with. All right, we'll have a look at the US dollar yen next. We might as well stick on the US dollar theme. Still, not doing a hell of a lot, doing nothing that's actually exciting. Absolute scalping only on this one at the moment. It's not giving us any signs to do anything other than scalp. On an hour, you can see we've got a series of higher highs and higher lows, which again is a bit of a consequence of that US dollar strength, which is good. But it's finding resistance and support levels. Basically, any reason for support or resistance, it will take it at the moment, the US dollar yen. So you've really got to scalp inside those zones. If it does break past this level, it's going to have trouble getting past the 107.70. And if it starts to break down and make a series of lower highs and lower lows, more than likely it'll get to that 106.60. So look, even though it doesn't look like it's doing a lot, it still provides good opportunities to actually scalp the really small time frame. So that's what you're really looking for in these. If you want to go long, if it's going to turn around, it needs to turn around this sort of 20 moving average. Hopefully you can track that up and potentially test this high and maybe break above it. That's about 20 to 25 pips away. And if it breaks that, the next zone is probably around this area here, around that sort of 107.75 to 107.80. That's where you're going to find the next resistance on that one. All right, the last one we'll look at is the S&P 500. We always keep an eye on this one to make sure that we're not missing anything. The daily is basically, not completely reversing what it did the previous day, but look, we've got a new candle open now, but a pretty negative candle. It's struggling. It's really, really struggling to get past this 30 or properly past this 3200. You can see that it's pulled back underneath here again. It's trading within the zone. There's no worries about that. We're not getting a lot of, signals that it's going to break up higher. It really wants to trade inside that 3,000 and 3,200 channels for mine. With all the uncertainty around what's happening with the US economy and coronavirus, of course, it stands to reason that the sensible trade would be to trade within a channel until we get some clarity on the direction of what that economy is going to do. So, and that's good. It provides good opportunities because we can draw the channel very easily, and I'll do some lines for it, and we can basically draw it up and see what I'm talking about. Pop them there, and around the 3,000 is the other level that we're certainly going to consider. Now, as you can see, that provides some pretty good opportunities for the downside to around the 3,000, but this 31 sort of 30 area has been a very, very difficult place to get past. You can see it's a mini roll reversal zone in itself. You can see how much trouble it had breaking through to the upside. And then when it did break up, it held up very, very strongly. So your very first point of trouble is going to be the 31 sort of 30 area, this zone right here. It looks like it wants to get there. You can see that there's divergence everywhere. You can see the MACD divergence, stochastic divergence, and just as importantly, price is actually showing that it wants to go down. Okay, that's probably the most important thing. It needs to make a lower low here. I'd like to see price make a low and close below this level here on the 1 hour, and then hopefully contract down and get to the very first zone here around that 31.40 area, and then at a stretch, if it gets past that, potentially push down to the bottom of the channel around 3,000. Well, I hope everybody's had a great week's trading. We've had some pretty good scalping opportunities, so hopefully you got hold of some of those. And some of the support and resistance zones are starting to really get tested now on the majors, so hopefully that'll open up a little bit next week and give us some more opportunities to get into the markets. Have a great weekend, everyone.